These guys literally changed their assumptions like they changed their underwear.
So Tesla is still a car company, okay? It's a car company.
This is what a stock market clown looks like, and at the end of these videos, they'll spin a narrative that fits a product they, of course, will try to sell you that will never lead you to outperforming the market. And you should always ask the question, hey, Paul, if you're so good at picking stocks, show me a 10-year performance of you outperforming the S&P 500.
They very well could become a software business. But until then, looks like a duck, quacks like a duck, walks like a duck, must be a duck.
Now look, I can call Paul a complete clown because I'm a clown. I've been a clown forever. At least I can admit it without jamming products down your throat that I know have no fundamental base into the future of investing. Like real investing, cost averaging into long-term index funds. Paul knows at the bottom of his heart that's what you should be doing, but that doesn't make him money. He needs you to believe that you can pick stocks based purely on earnings and fundamentals and dramatically outperform the market. That has never been the case. Ask him his performance because look at mine. I'm a clown, but hell, at least I'm willing to show you what my accounts can look like, and I've dramatically, on every single account I own, have outperformed the market by leaps and bounds over long periods of time. Actually, this isn't even my longest standing account, and it's probably a little exaggerated because my other accounts may be outperforming the S&P over, an 8-9 year period by maybe an extra 50 to 100%. But I've had some astounding based returns here that I wish other people would just show you, because I'm not using this as a vector to be like, buy Tesla stock, it's so undervalued. I'm just saying you can't just call Tesla a car company. You are completely effing idiot if you think Tesla at this point is still just a car company. None of the IP and none of the crazy amount of engineers they've taken on to build these astounding products have any value right now or into the future. I mean, they just dropped this video of the Tesla bot, and you can't help but see Elon's synergies and how all of these businesses will fundamentally work together. You look at things like Neuralink. You're not telling me like Tesla could easily just use a robotic arm and probably do most of the jobs at an Amazon factory, replace jobs at McDonald's for burger flipping and putting those fries in the fryer. But the reason they're building a full robot is because all of these appendages will have real value for multiple applications, especially with Neuralink, with people with disabilities. This is true transformative stuff here that you can't help but think that this is going to be margin expanding beyond imagination here. And again, I'm not trying to sell you on Tesla stock because I still believe fundamentally revenues, things matter. We'll talk about Tesla's value in a moment here, but I mean, you can't help but see even in space travel how these things are going to be used in every aspect of life. Even forget self-driving, forget the car aspect of their business. This robot alone, if it continues to evolve at the pace it's evolving, and you remember what that first one looked like? Oh my God, it had to be held up. We're moving along so fast in the pace of innovation, and Tesla's leading a lot of it, and most funds don't hold Tesla stock. I know I'm not a fan of Meet Kevin, but he did pronounce that you look at many major funds, hedge funds, they just won't hold Tesla. And taking a look at the stock today from a valuation standpoint, it is a very expensive company, and it'll always be an expensive company for these reasons. It's what led to all this volatility. Tesla will always be a volatile stock. If you can't handle volatility, if you can't handle these kind of movements, and you're overbuying this in your portfolio, you're an idiot. You shouldn't even probably buy Tesla stock because of the insane emotional movements of the market trying to figure out what that future value is worth. So how do we compare this to a company like GM? If Tesla is truly just a car company, why is it valued so much higher than something like a GM? Well, even as a car company, GM is priced as though it's not going to be around in the future. And they're heading into some really troubling times right now with how hard it is going to be to buy a vehicle in this tougher, higher interest rate environment. And it's likely that Tesla's going to be releasing a much cheaper model of a vehicle. And if they are competing in the EV space with a much more affordable vehicle in a much tougher, higher interest rate environment, General Motors is going to have a hell of a hard time keeping up. That's why these companies can trade at multiples of 4 times. I mean, this looks like the deal of a century. Yet this car company has declared bankruptcy multiple times through its history, let alone even the infrastructure side of it when it comes to obviously the charging network, right? But GM is in a catch-up game. They are fighting to deal obviously with self-driving. They're fighting to bring the cost of their vehicles down. They're trying to introduce EVs, but they're always going to be in that level of catch-up. And again, I'm not trying to just crap on General Motors, but I mean, would you have wanted to own General Motors? What would you have preferred over the last 10 years? And I know this is a backwards looking game, but General Motors or Tesla, right? And back then people said Tesla was too expensive too. And now the valuation has changed so much. It's hard to listen to Paul because Paul is saying today it can't be worth that much. He would have said that in 2019 and 2017 and 2016. By the time these innovations catch up, the stock catches up with them. So you have to speculate to some degree. That is all investment investing. It's betting, but trying to put the odds in your favor. You're trying to bet on vision. And again, let's just break this down based on Paul's valuation metrics with his tools here he wants you to buy, which by the way is just a spreadsheet tool. You can get these for free anywhere. Don't pay him a monthly subscription. Just put it cost average into an S&P. You could probably make a substantial more return than you're ever going to make off utilizing this tool. Just my humble opinion, but let's get into it.
Essentially, right? Not these numbers, but these two? Yeah, okay. So where is it now? Where's it going to be then? I put 18, 21, and 24, which is still a premium for a car company.
Again, I hate that he says car company. Let's call it a tech company. And yes, for 18, 25, 30 times multiple, that is probably a fair valuation for a tech company because it's where they seem to be trading for quite some time.
All right. Now for desired annual return, you can get 9 or 10% from investing in a low-cost ETF and following the market over long periods of time.
Yeah, that's what most people
so
should do.
What return do you want to buy an individual company? The more risk and the higher you make your assumptions, you need a higher desired return. So I put 11, 14, and 17. I actually want to increase it just a little bit. 12,
yeah, I think
14 and a half, and 17.
Because
guys,
return.
18% revenue growth. It's going to be hard. Yeah, you're going to look at this and say, well, Paul, they did 50. Yeah, but they were a lot smaller. Could this still happen? Absolutely. But remember, investing is about making decisions. It's basically betting. And where's the betting in your favor? If the market was pricing Tesla like it wasn't going to grow at all, I'd be all in favor of probably buying. I'd be like, oh my God, the market's pricing this like it's not going to grow for 10 years. Absolutely, it's going to grow. Remember, a good thing can be a bad investment at the wrong price.
But the thing is you never know what the right price is, because if you go back to the dot-com bubble, even the S&P 500 was at the wrong price. But what are you going to advise somebody to do? Not as financial advice, but cost average into the stupid thing. If you believe in the technology, you don't care what the price is, you're going to cost average into it over long periods of time and get the median price, whatever the fair market price is going to be. That's how you get into a fair market value price. I hate when people just presume you just one time in and that's it and you're overpaying for it today.
That's the difference between investors and speculators. Investors know that
all investors are speculators. All investments are speculative risks into future-based returns, folks. It's just a matter of how much risk you're willing to take, because the S&P over a 20-year period has never lost money. Most individual stocks have lost money. Again, I'm not trying to tell you to buy Tesla. Over long periods of time, it's really hard picking stocks and knowing when to get in and out, because it's usually the game you're playing.
There's a price that's too high to pay. Speculators just hear the story. And as our friend Professor Oswald says, a story.
Remember, in 2019, everyone said Tesla was too high. That was too high of a price point to pay. You'd overpay for it, and that's a guarantee. That's what Paul would have said in 2019.
Numbers is just a fairy tale. So combine the story and the numbers. The story on Tesla is phenomenal. The question is, can the numbers justify it? So guys, remember, I'm hit the analyze button. Just stay with me 1 or 2 minutes longer, but you get access to all of this with our trial. The link below, everythingmoney.com/sign up.
Save
7
yourself
days
the money.
for free, full
Cost
access.
average into an ETF.
I hit the analyze button. The stock is currently at 265.
You know what I want to do? I want to prove Paul wrong. I want to take any money that I put into this stupid little, free to use, you could find anywhere on the internet, sort of a tool here you can make with a spreadsheet, and just put it into Tesla. Just cost average into Tesla, all the money you would have put into this product, just so you can make fun of Paul in the future if you outperform.
I have a low price, ready for this one, of 37, a high price of 223, and a middle price of 105. Guys, even the highest of assumptions, it's still not justified. And that assumes, all this assumes, they don't issue any more shares. If they issue more shares, you're being diluted even further. This price is going to go down and down and down.
I'm curious if I backtrack to Paul's videos and just maybe I'll just throw a clip up now to see what Paul's evaluations were on Tesla from even a year ago before it hit $100 a share, because he's saying at $100 a share, probably a pretty good buying opportunity, which it hit, right? But let me just cut to a quick video of that.
Here are the numbers.
I'm excited to see it.
Low side of 15, high side of 77, middle price of 40.
Yep. 14 on the low, 58 on the high, middle ground 34.
So look, if you believe these highest assumptions, it looks like the stock's a buy. That doesn't mean you go buy the company. Go do your research, join the community, talk to people who've read the 10K.
These guys literally changed their assumptions like they changed their underwear. Wow, what a month difference on their price targets make. It's kind of just mind-boggling to me. But I also want to state that what would make me buy Tesla stock back? Well, as I've stated, as somebody that made a lot of money off Tesla stock, I would really like to see self-driving start generating revenue. The day it makes a drop of revenue, all my money's going into it. The problem is the stock valuation is probably going to catch up pretty dramatically at that point. But I would pay any value for a company that's getting into that space and is proving revenue generative like Google is. I think anybody playing in the AI, self-driving space and robotics, these companies obviously have a vision for what the future is going to be. And we know that this is going to be so insanely valued. These are going to be trillion-dollar probably market cap possible opportunities, right? It's just a matter of how we get there because there's no clean path to getting there. So it's kind of playing this speculative time where the price of the stock is going to be extremely volatile. Tesla stock drops, which I'm hoping it does because I'm expecting that this coming up quarter is going to be not the best of quarters because of how tough the market environment is. Elon said that they're scaling a lot of factories right now, so we're not going to see probably the best quarter. And if we're lucky, the stock will be impacted by that. That's just my opinion. I'm not a financial advisor. I'm not telling you what to do, but you can always subscribe to this channel to see what I end up doing and how maybe just as a vendetta against these guys to try and just to turn it into a joke. Maybe I'll just start cost averaging into Tesla. Maybe that's what I'll do just for fun and entertainment, just to see if I can outperform Paul's stupid analysis and prove to you guys over the long term that, you know, if this works out and I make money, I'll be like, hey, Paul has no idea what he's talking about. He never has. I don't know what I'm talking about. That's why I'm a clown. But I'll pass that question off to you. I'd love to know what you think in that comment section below.